afternoon, ladies and gentlemen. Today we have Miss Nandini Mansinghka amongst us. She is promoter and CEO, Mumbai Angels Private Limited. Hello, ma'am.
Hello, Urvi. I'm so glad to be here.
We are glad to have you on Business World, ma'am. On that bright note, I would like to ask you, how has the last 1 year been for you professionally as well as personally?
So, that's a question which has very layered answers because right now we are in the midst of, I think, the second wave of the COVID pandemic. So, uh, you know maybe my answer will keep changing week on week on how things progress. But I can talk to you about the last 1 year. So, if you just cut to 2020 and you look at March 2020, we were, I think, at a lesser intensity but very similar place. So we were also getting worried, like everybody else, that maybe, this is the time when investments will slow down. Maybe business will be bad for us. Surprisingly, last year was our best ever. So what happened is that during the pandemic, we saw a more investors getting interested in this asset class, which is early stage venture investing. And I think it was a function of two or three things. One was they had more time on their hands, so they could learn more about this asset class. Secondly, I think their own businesses were not doing that well, so they had money to deploy. Third, even the listed space was not doing that well. So we actually enrolled more investors onto our network, and we did more deals last year than we did ever. So it was a very good year for us. If you actually see the entire ecosystem of startup investing, you will find the same story there. So the good thing was that during the pandemic, investors kept putting their money behind new startups and new founders, which they thought will do well over the next couple of years.
Yes, it's really heartening to hear about positive news in these trying times. So, before we move ahead with the interview, I would like to ask you, what is Mumbai Angels Network all about? What is the guiding ethical principle behind it, and what is the aim of it?
Yeah. So Mumbai Angels Network is one of the first angel networks that were formed in the country. This was formed in 2006. It was formed at a time when angel investing as a concept was not understood in the country. So this was started by two of my very dear friends, Sasha Mechandani and Prashant Chuksi. So they were the co-promoters in 2006. I came on board in 2017. So we are now three partners who run this network. So this platform is primarily about bringing individual investors into investing in startups. So what we do as our role is to we look at about, say, 8 to 10,000 startups every year, and we keep filtering those and show about, say, 100 or 120 of these to our network of investors. So these they are about 550 of them across the world. So the name Mumbai Angels is because the network started from Mumbai, but today we are actually not just pan-Indian, but a global organization. So we have investors from about 40 different cities and 10 different countries. And what are these people looking for? They are looking for new innovative startups that they can invest in. So our job, if you looked at us, would be we would be doing what a fund does. Okay. Only we don't take the decision on behalf of our investors. So what we do is we will bring these startups, we will do all the due diligence, we will find out the basic information, and we will show it to our network of 550 investors. And once, say, for on an average, every investment, say about 10 to 20 of these 550 will say, listen, we are interested. And they put money in this. Then our job is to close the deal and actually keep monitoring that company and keep, finding ways to help them grow till the next round of investment happens. So our job is to represent our investors through this entire platform. So we've done this now, like I mentioned, from 2006 to now 2021. And we now have done this for over 170 companies. So our portfolio is 170 strong. And we are one of the very few networks in the country who have actually seen the full cycle from investments to exits. And you were asking, saying, what is the ethos? What do we stand for? I think two or three things we stand for, and we are known for this in the industry. One is we are known for our very strong focus on exits and not just investments. So we are known, we don't just say, okay, you will not find us out there saying, oh, we did so many investments. We are more focused on saying we did so many exits, because we think it's an asset class and people need to, make money out of it, right? Secondly, we are known for our transparency and processes. So we don't take ad hoc decisions. Which company comes onto the platform, which company gets invested in, which company is taken forward, is based on algorithms, very, very transparent processes. So investors, they come to us and they say, we are confident that if you are involved, you're going to take care of our interest. That's the second thing. And the third thing that we are known for is the in-depth due diligence and continuous monitoring that we do of our portfolio. So what that means is that we are not just asking our investors to take their own call. We will give our inputs and we will do whatever is required to help them take the right decision, and for us to make sure that the company does well. So here are the three things that we are known for.
Right. Hearing you, Nandini, I can understand why Mumbai is called the financial capital of India. So,
Thank you.
Talking about venture capitalists and angel investors, it has become the burning profession to take up with many more VCs coming up. How do you stand out from upcoming players in the market, or those who have already been there for some time now?
So see, one is we are one of the oldest. So for what we do, we are one of the oldest in the thing. And like I mentioned in my earlier, there are two things for which we stand out. One is we are one of the few players who've actually seen the full cycle. Like you mentioned, being an angel investor today, or say investing in startups, has become very fashionable. I can tell you it's a very tough job. Yeah, it is extremely tough to be able to ensure that you're making money out of this asset. And that can only be done if you understand the risk involved. So we understand what this asset is about. We know how to run this entire cycle, and we have the patience and the expertise to do it. So, two things I keep saying: A, investing in startups is a craft. It's a lifelong craft. So whether it is us as the asset managers or individual investors, you need to learn the craft. This is not something that you talk about in parties and get over with. That's not what it's all about. And the second is that this has to be done with a lot of patience and a lot of discipline. These three things, when done together, this asset class will give you disproportionate returns. And I don't want to, throw out a number, because I don't think that's the right way to look at it. But I can tell you that this asset class will give you a much higher return than any other comparable asset classes in the market.
When we talk about investing and how it is becoming very fashionable these days and how it's a really difficult job, how has this trend changed across 2020 and 2021, especially during the pandemic time?
So see, one is, the very good thing is that I have seen the ecosystem mature. So, I have been a part of this ecosystem myself now for about 10 years. So from 2010 onwards, I have been a part of this. I have seen a marked change in the maturity and the understanding, both from the investor side and the founder side. So that is one long trend that I can see, not just last year, but say last 5 years. The maturity and the conversations that are happening have changed. Last year, what happened is, see, when we started, in the beginning of the pandemic, we thought that most investors are going to shy away from this asset class, because we said, oh, there is this pandemic. And the good thing that we saw is that the investors are taking a long-term view. So an angel investor who comes into this, a startup, knows that they have to wait out for at least 4 to 5 years. And the investors continue to do that. What did happen, and I think it's a good sign, is that people started asking more specific questions on, the resilience of a business model. If the original business model doesn't work, is there an ability to pivot? Then the sectors which were hit, very, very obvious ones like retail, fashion, things which are getting hit upfront. How can you pivot over there? What can be done overall? But on an overall basis, I do not see a very strong change in behavior of the investor for at least startup investing over the last 1 or 2 years.
Right. When we look at 2021, it has been a year of unicorns for India. And a lot of them are concentrated in the edtech or investing space. So, as somebody who has been there, done that, do you think that this investment on the e-commerce side of things is a temporary phenomena, or is it here to stay even when COVID is a thing of the past?
I think it's here to stay. See, I think what COVID has done is that it has actually fast forward all our resistance to technology. So what used to happen earlier, where people would say, oh, this can't be done online, for example, meetings can't be done online, things can't be done online. You need to have face-to-face meetings with investors to get them to invest. Education, fashion, you name it, right? It's all there. What COVID has done is that it has taught a lot of us that maybe a lot of way that we were doing business earlier, or the way we were consuming things, was a legacy of the past. And that has fast forwarded it to a point where I don't think we are going to go back to our old ways completely. I think there is a new normal. And it's not just something that is being forced on us. It is something that we are actually embracing. So I will give you a very personal example of Mumbai Angels. We are a team of 40 people. And we have not gone to the office since March of 2020. And it doesn't matter to us. Now I have my team members across the whole country. So people are sitting in, smaller towns in Goa, somewhere in Rajasthan, all over the country. And I have no problems if people can deliver. So a lot of that is going to come. To your questions on unicorn, I think the good thing about India is that we are just at the beginning of this party. I keep saying this, that if we are going to become a 5 trillion economy in a couple of years, half of that growth is going to be driven by companies that are not even born today. So when they get born, chances are that some of them or most of them will come to platforms like ours to raise their first round of funding. And that is how the growth of a unicorn happens. So if you actually look at it, what is a unicorn? A unicorn is a startup that has just grown through continuous rounds of funding. And most of these are, 2 or 3 people, companies that have started out with very little capital. That is the growth that you're going to see. And in India, you're going to see, my prediction is that you're going to see it as at a very widely distributed scale across different industries, consumer, defense tech, ed tech, space tech, non-tech companies, very, very, very mom and pop models. Anything that can scale in India, you will see will become a unicorn.
Right. Given that startups are growing at a, rampant pace in India, you are there on the investor side of the table. What are the parameters you look at as an investor before you pledge a certain amount to a startup?
Yeah. So, see, this question, doesn't have an easy answer. I can tell you that I've been speaking to my team, over the past few days, and we were just trying to, see if there is an algorithm that you can create for this. And what we realized is that as of today, we look at least 100 parameters, 100 minimum. Okay. Having said that, there are some buckets that I can put, like, overall some things that you will be looking at. And I think some of these you have heard several times over, but these are critical. So I will highlight. One is, of course, the founding team. What is the experience? Do they understand their business? Are the skill sets there? The second one is the size of the opportunity, size of the market. So if it's a very smart team, but it is going after very small an opportunity, it doesn't interest us. On the other side, if it's a very large opportunity but the team doesn't have the ability to deliver, we are not interested. So both of these go hand in hand. So these are primary things. Then, of course, there are things that you start looking at to say, what is the traction? Is the company at an idea stage? It has done its first few customers. Secondly, has it got its unit economics in place? So, today you will have these models where people are making losses in crores and crores, thousands of crores. Yeah. So a lot of unicorns actually, if you see their P&L, it doesn't look very pretty. But that's a call that the investor is taking on saying, I'm going to keep betting on this company till it either becomes profitable or it becomes a part of a larger game plan of some strategic investor. For us, we look at unit economics. It's an important part to say, is the company making thing? Then, of course, there are things on saying, has the company raised money earlier? Who is there on the cap table? Do they have a good board of advisors? How is the competition in the market? Is the company working in a place where there is hardly any competition, or is it a red ocean that you're out there and you're just trying to compete with? How are you in terms of pricing? How are you in terms of the perception of your quality, to the market? So these are 7-8 very overall things that we will look at. One of the things that we have actually started seeing has started impacting deal closures, and I think if founders are listening to it, they should think about it. One is cleaning up their cap table. So the cap table should be something that founders are very, very clear on, who owns how much. And the second is litigations. So what we find is that investors are becoming increasingly wary of companies where there are litigations to the company. But yeah, so like I said, these are buckets. But if you will keep subdividing these, at least 100 parameters that one would look at. But if you ask me to highlight two, it is the founder and the opportunity.
Yes, legal battles can get really messy and time consuming and financially draining for most people. So yes. When we talk about Mumbai Angel Networks again, what are the key areas which you are focusing on, I would say, in the last 1 year, and how is it different from the year before that?
In terms of the deals that we see, right? So, see, we are a platform and we are sector agnostic. So our job is to keep finding innovative companies that work for all our 550 investors. Okay. So in that sense, we are sector agnostic. But what we have seen is an increase in certain sectors, both in terms of investor interest and the kind of innovative companies that have started coming in. So I can tell you some of these names. So, for example, defense tech is one area. Space tech is another area. That's one area that I'm personally very, very excited about. Then life sciences, healthcare, health tech. Then fintech, I would not want to say fintech overall because I think it has become an overabused. But there are, sub-segments within fintech like legal tech, insurance tech, those kind of things we see have started coming up. In India, we also see a lot of consumer-driven investments happening, so completely non-tech. So for example, beauty care, personal care, we've done a lot of investments there. We've done investments in food. So just freeze-dried fruits. So, there's no technology. It's the India consumer play. We did a very interesting investment last year in a company that cultivates hemp seeds. So that's very interesting, because then from the outside you feel, oh, there are legislations around it and regulations. And when you go into it, you realize, no, cultivation and selling of raw hemp seeds is absolutely okay. And it actually has a lot of potential in the country. So it's a wide range of companies that we invest in. And we are seeing a lot of investments happening in these segments.
Right. Mumbai Angel Network has come so far with a large panel of distinguished investors. But as we know, what has brought us here usually does not take us forward. We have to do something different. So what is your plan of action from henceforward? And where do we see the company 5 years down the line?
Yeah. So great question. It's my favorite question that I keep asking myself, day in, day out. two things we are going to do very soon. One is we're going to change our the way we deploy capital in these companies. So we're coming up with two funds. One is an angel fund, which will allow investors to choose their own company, and we will make the investments. And we are also coming up with a sidecar fund, which will basically invest in everything that the platform invests in. So that's one. The second is we are going to start focusing a lot more on our algorithm, on how a company is selected, how it is taken through, and how it moves through the entire process. The third is that we're going to become a very strong mothership for first-time VCs. So what we mean by that is that if you are somebody who understands investing and you are saying, listen, I want to start my own fund, our answer to you is you don't need to. You come to us and you do what you do best, which is find companies and invest in them. We will find the investors for you. We will do everything else. So you do your job well, and we as a platform will do our job well. So here are a couple of things that will happen. I am seeing a growth in of Mumbai Angels, which is at least 3 to 4 times year on year in terms of our amount of money that we deploy. So that's the ramping up of our ability. And how I'm confident is that this has to happen over a period of time, is that we are now seeing that most sophisticated investor in the country has started saying, listen, I need to have at least 5% of my overall money, overall net worth, into investing in startups at an early stage. So that is a huge amount to get deployed. And we think that we are best poised to be able to bring that into play.
Right. As somebody who has been a veteran in the industry, I would say, when we talk about first-time venture capitalists, or we talk about people going in the startup sector in general, what would be your advice for people who are, or youngsters who are coming up as aspiring angel investors or venture capitalists?
Yeah, excellent question. I think this has to be looked at as an asset class. So what happens is, most of the time, we keep reading about unicorns. There are, this company has become $1 billion, that one has become $1 billion. And then each investor is actually trying to find ability to invest in one or two of these. In our industry parlance, that is called unicorn hunting.
Okay.
My view is unicorn hunting is luck. It's not a strategy. So none of us can go out there and say, I'm going to hunt for unicorns. You don't hunt for unicorns. What you do is you become an extremely disciplined investor who starts building a portfolio of companies on a regular basis. So, don't stop at 10. Keep building at a 30, 40, 50, and find out ways where you can deploy smaller amounts of money if need be, depending on your appetite. What we have seen is that once you do that and you build a certain portfolio, up to 10 to 15% of your portfolio will start giving you returns for the rest of the investments. So you have to become an extremely diligent, disciplined, and a portfolio approach for becoming an angel investor. So, like I keep saying, angel investing is a lifelong craft. And if I see myself, and if I fast forward and say I'm 90 years old, I don't know what else I'll be doing, but I'll surely be investing in startups at that point.
Right. There is no shortcut to success, be it as a startup or a person investing in a startup. So
Absolutely.
this was a really insightful interaction for me as well, where I learned a couple of investment jargons. And I would really like to thank you for your time this evening, ma'am. And I will take your leave. It was really a pleasure talking to you. And I wish we could take this forward, but we have a paucity of time. And
Thank you
thank you so much for joining us.